In the last week, Bitcoin has blasted past the $20,000 resistance and has hit a new all-time high of $24,000 and is now hovering around $23,500 as I make this video on 25th December 2020, also known as Christmas Day. Now, without going into the technological or philosophical aspects of Bitcoin, in today's video, I want to discuss some of the key drivers that are leading the wave of this new price point and why I believe this is only just the beginning to a longer term increase in the value of Bitcoin as an asset class. Hey guys, thanks for joining me. If this is your very first time listening, my name is Dexter, and in this show I talk about personal finance, credit, investing, as well as financial technology. And in today's video, I'm going to be talking about Bitcoin specifically and what are some of the key drivers that are currently pushing up the price of Bitcoin and where I see the price of Bitcoin going in the future, let's say in 5, 10 years, 20 years. And I think there's a lot of promising prospects for the price of Bitcoin to continue to increase over time in price. And that's not to say that the price of Bitcoin couldn't crash at some point between now and the next 5 years. There's a very high likelihood of that. But to see that the general trend is that there's going to be a higher high over time. Now, I'm sure you've heard of people saying that Bitcoin could be $100,000 by 2025 or even $400,000 in the next decade. And I think these are all actually possibilities. $100,000 for Bitcoin by 2025, in my opinion, is a conservative estimate. And I guess you're waiting for it, but in this video, that's what I'm going to be here to discuss. Now, number one, Bitcoin is scarce. There's only ever going to be 21 million Bitcoin mined and produced. And what that means is that if there is no more supply, based on the economics of supply and demand, that means that if the adoption rate and demand continues to increase for Bitcoin, which is what we are seeing, then if there is no more supply in circulation, then that means that the price of Bitcoin would have to increase to meet that demand. That leads me to the second point, which is for the adoption rate. Bitcoin is only just scratching the surface in terms of the amount of people globally who are using or getting exposure into Bitcoin or even learning about Bitcoin. So the complete addressable market of Bitcoin is only just beginning in its infancy stage. And that also includes for the platforms that are able to transact with Bitcoin or to be able to buy and sell or use Bitcoin. All these infrastructure are only just beginning to be built out for people to be able to use it. So if you look at this trend, that means that as more platforms are able to use Bitcoin and that drives the mainstream adoption and the adoption rate increases, that would also drive up the price of Bitcoin. And now number three is, in terms of that adoption, let's look at compared to 2017 where the price of Bitcoin hit an all-time high of around $19,800 at the end of 2017, around December. Now in December 2020, fast forward, the price has hit around $24,000. And the reason for this is that institutional money is now driving it. Unlike 2017, where it was driven predominantly by speculation and retail investors from North America as well as Asia, now in 2020, it's driven by financial institutional money. And that's very important because that means that these are organizations that are dealing with much larger amounts of money, but they're also companies that do require checks and balances within making these decisions that they're doing. And then not to mention that these financial institutions will then start to push these products onto retail investors such as you and I. So there is that trickle effect and that further increase in the adoption of Bitcoin. So there are examples like Grayscale buying $140 million worth of Bitcoin in 24 hours, or PayPal now accepting purchasing, selling, as well as transacting in Bitcoin, or for Square, which is started by Jack Dorsey, to also buy up to $50 million in Bitcoin, as well as MicroStrategy, which owns up to $1.5 billion worth of Bitcoin. So these are just a few institutions that are having exposure in Bitcoin or enabling their users to use Bitcoin. And this adoption is very key in legitimizing as well as validating Bitcoin as an asset class or a store of value. Now, this leads me to the next topic, which is that Bitcoin is a true hedge against inflation or reflation. Unfortunately, during this time of the pandemic, economies have been suffering because of it. But by doing so, central banks would need to step in and print money as well as lower interest rates, which is reflation. This means that as central banks or governments print more money, there's more money in circulation to stimulate the economy. But with more money in circulation, that means the value of every dollar is actually lowering. Now, with Bitcoin only ever having 21 million to ever be mined, that means that it is a true hedge against inflation because it's never going to increase in supply with Bitcoin. Now, alongside some of the more notable billionaire investors like Mike Novogratz or Tim Draper or Jack Dorsey of Twitter, more recently there's also been individuals like Ray Dalio, who owns the largest hedge fund Bridgewater Associates, who actually stated, is he missing something about his understanding in Bitcoin and wanted to learn more? Now, for Elon Musk as well, he did recently tweet that he wanted to see whether it's possible to actually convert some of Tesla's balance sheet into Bitcoin as well. So, not to say that they're actually taking action on this, but just the thought process and actual interest in this is showing that there is a shifting in the mindset and understanding or adoption of Bitcoin, even at the high level of some of these great minds such as Elon Musk or Ray Dalio. If you're comparing Bitcoin to digital gold, gold's market capitalization is around 9 trillion and Bitcoin's market capitalization is hovering around 438 billion. So that means if we were to say that the price of Bitcoin could actually get to on par with gold, that would mean that the price of Bitcoin could theoretically reach above 400,000, which is the price that some people are pegging, because that's about a 20-time increase in price to reach on par with the market capitalization of gold. And now that's not to say that a lot of people are, there's always going to be a time and a place for gold. But it doesn't mean that more people are starting to either split some of their diversity and some of what they would put into gold into Bitcoin and vice versa. So that's where that could be another key driver of Bitcoin's price if you're comparing it to gold. Now, this next reason might be a little bit more controversial, but I do think when you think about it rationally, it is true. And that is that Bitcoin is not owned by any one country. So there is no sovereign risk, but instead there is global risk. So let's think about it in orders of magnitude. So for me, I'm a person, and then, one step up, you could say there is now a company or a business, and then multiple businesses combined could make an industry. And then multiple different industries could make up an economy. And an economy would represent a province, state, or country such as the United States. Now, when you peg the US dollar to the economy, essentially the US dollar is a representation of how the US economy is doing and the confidence that people have globally towards the US dollar. So in the same way, when you manage risk, at the sovereign level, you're comparing the risk of the US with US dollar. Now, there are multiple facets that are kind of driving up the price of US dollar, which include one, predominantly all of oil is traded in US dollar, and most of all countries need to use oil. So if you need to buy oil, you need to buy US dollar to then buy oil. So that's artificially propping up the value of the US dollar. Now, a second would be that because there's many foreign reserves for other countries to hold US dollar, that means that they wouldn't want the value of their own foreign reserves to also decline when US dollar declines in value. So that's also an incentive to keep the value of US dollar strong, because back in the day, a lot of countries, they were worried about hyperinflation and the value of their currency, ultimately going into the gutter. So to, hedge against that and to fight that risk, they would have US dollar as an alternative currency that they could store as a foreign reserve. And for the US dollar, it was previously actually held or pegged to the gold standard, which means that dollar for dollar was worth with gold, but that was actually taken down by President Nixon in 1971. So really what that means is that the price of the US dollar is the price that we believe it is worth based on the trust of the US as a country or as a sovereign entity. Now the same applies for Bitcoin, but in my mind and the minds of many people, Bitcoin is actually a step further because it's not governed by any one country. So that means that we're taking on global risk. So we're taking on the trust of the entire globe that the currency would not be worthless in the future. So in orders of magnitude, I would say Bitcoin is at the highest in terms of value and lowest in risk as a currency. So just as a disclaimer, Bitcoin is a very volatile asset class at this point in time. I am not a financial advisor, and the things that I talk about within this video are purely my opinions and some of the research that I've done, but I definitely recommend you to do your own research, whether you're considering buying Bitcoin or continuing to hold Bitcoin. Hey guys, thanks so much for watching. If you feel like this video has added value to you in terms of understanding or framing Bitcoin and the potential price of Bitcoin, please don't forget to subscribe, hit that thumbs up button, as well as ring that bell icon so you do get notified when I do come out with new weekly videos. Until next time, my name is Dexter. Thanks so much for watching again. Have a wonderful day and happy holidays.